Welcome back to Crypto Coin Insider. I'm Candice with your daily Bitcoin analysis for Monday, December 1st, 2025. Today we are looking at what changed overnight and what the market says right now. The biggest story in crypto over the last day is the way December opened. Bitcoin slipped into the high 80,000s during early Asia trading as risk assets sold off again. A wave of liquidations hit over-leveraged longs, and traders are clearly de-risking into the coming Fed meeting. At the same time, spot Bitcoin ETFs have just started to stabilize after weeks of heavy outflows, hinting institutions are dipping a careful toe back in. With that backdrop setting the tone, let's see how the price is reacting on the charts. So, where did we close and what happened overnight? Yesterday's daily close sat near $91,000. Since then, sellers pushed price down toward the mid to high 80,000s, tagging the lower volatility band on this chart. Right now, Bitcoin is trading around $87,000 on the setup. Price is clearly sitting below that big 200-week moving average, which is still sloping down. So the long-term trend remains under pressure, even as shorter-term buyers try to step in. Now let's break down what the chart itself is screaming today. Start with Elite Wave on the left. It still labels the structure as a bullish impulse, waves 1 through 5, meaning the larger roadmap is a strong uptrend forming, not a full macro top. The action note literally says, watch for a wave 3 peak. So this pullback still fits as a corrective leg inside a bigger bullish engine. Next, check Alpha Flow Pro on the right. The mode at the top is set to bear, not bull. Market phase is stamped deeply oversold, and the action box says, monitor, hold cash. Confidence sits around 35%, so the signal is cautious, not all in. That combination tells active traders two things. Shorts should not get greedy down here, but spot buyers still want patience and tight risk. Look at the metrics box. Trend is marked bearish, which lines up with that rolling series of lower highs on price. Volume is just over 4% on this read, so this is controlled selling, not panic. Key support is highlighted around $81,000. Major resistance sits up near $105,000. Risk management suggests quarter-size positions with a stop around $79,000 and a take profit close to $111,000. So the system wants traders small, selective, and very aware of both edges. The signal panel calls this a high volatility zone. That means expect fast wicks both directions, hunting sloppy stops. It also means breakouts and breakdowns can overshoot before snapping back. So if you are trading here, entries and exits need surgical precision. Let's talk sentiment, because psychology is everything right now. The sentiment box shows a score around -17 out of 100, tagged slightly bearish. That is fear, but not full-blown despair yet. Traders are nervous, but still watching, not rage quitting. On the right, the key metrics reinforce that picture. The 200-week macro trend is marked X down, clearly bearish. Price sits more than 20% below that 200-week moving average, a deep discount zone. MVRV Z-score is near 0.95, basically neutral, so we are not in blow-off euphoria and not in historic capitulation either. It is that uncomfortable middle ground where smart money quietly accumulates from forced sellers. Speaking of smart money, whale and ETF data back this up. After a brutal run of outflows, spot Bitcoin ETFs have finally printed modest net inflows again. On-chain, mid-size whales, those holding roughly 100 to 1,000 coins, have been buying this dip, while the largest wallets keep trimming risk. The Fear and Greed Index recently bounced from extreme fear in the low teens back into the high 20s, so the market moved from full panic to cautious, but nowhere near greed. That fits the chart's slightly bearish sentiment and deeply oversold, undervalued tags perfectly. Now the big one for long-term traders, the power line zone. This model plots a 16-year fair value line for Bitcoin. Right now, that fair value cluster sits around $97,000. With spot price hovering near $87,000, we are trading at roughly a 10% discount. The panel literally labels this undervalued with a great buy badge. Pair that with deeply oversold conditions, and you get a classic coiled spring setup. But remember, coiled springs can still compress lower before they launch, especially while the macro trend and alpha flow still read bearish. So, how does this translate into price paths for the next 3, 7, and 30 days? Short term first, the next 3 days. With a high volatility zone and quarter size risk guidance, base case is a messy range. Think tests of that 81,000 support and spikes back toward the high 80,000s. A washout wick into the 79,000 stop zone would not be surprising at all. As long as daily candles keep closing above 81,000, bulls quietly keep control. Lose that level convincingly, and the market invites a deeper flush. Now, the 7-day view. If buyers defend this high volatility pocket and ETF flows stay stable, a reflex bounce is likely. That would mean a grind back into the low 90,000s and a test of that mid-channel moving average overhead. The big line above remains the 105,000 resistance from the metrics box. If price can reclaim that region, sentiment would likely flip from fear back toward cautious optimism. Instead, if we keep getting rejections under 90,000 and lose 81,000, then 7 days could target the mid to low 70s before serious buyers step back in. For the 30-day outlook, think in scenarios, not certainties. Bull case first. Elite Wave's bullish impulse plays out, and this deeply oversold zone becomes the higher low of the cycle. Powerline fair value pulls price upward, ETF inflows return, and macro conditions stay friendly. In that path, Bitcoin can break above 105,000 and make a run toward that 111,000 take profit region sometime over the next month. That would look like a classic Wave 3 expansion coming straight out of an undervalued pocket. Bear case. Alpha Flow's bear mode remains in control and the deeply oversold tag persists. Support around 81,000 breaks decisively, dragging price through the 79,000 risk line. ETF flows roll negative again, macro delivers a hawkish surprise, and we see one more major liquidation wave. Under that script, 30 days could bring a final purge into the low 70s or even high 60s before a real macro bottom forms. Either way, this zone is likely to define the next big move up or down. So what is the verdict today? The higher timeframe roadmap from Elite Wave and Powerline still leans bullish, but Alpha Flow Pro, the 200-week trend and sentiment are screaming caution right now. That makes today's bias neutral with a bullish tilt, not outright risk on. This is a place to plan, scale, and respect volatility, not to YOLO everything at once. Because the bias is neutral, here is the call to action. Hit like if you are waiting for clarity, comment your price target below, and subscribe so you don't get chopped up in this volatility. One more thing before you go. Subscribers can get 20% off every single trade fee with Pionex.com. These are the world's best grid trading bots that print money in sideways and bear markets. I personally use them every day. Link in description, grab the discount today. Warning. Trading cryptocurrency is extremely risky. Do not risk capital you cannot afford to lose. This video is not financial advice.